I think the key point really is that the share price has more than factored in a fairly big success of the Switch 2. We've been very bullish on Nintendo from November of 2023 all the way to January, February this year. But from there on, we start thinking that the valuations are started looking really stretched, particularly if you look at it look at the valuations on March 21 term, which is the pandemic term, right? When everybody was stuck inside and everybody was playing Nintendo games and there was no schools. So, that really gave the original Switch a new lease of life and took operating profits way beyond 600 billion. In fact, came close to about 650 billion operating profit. This year, we're looking at 270, right? So now the share price is trading around just over 30 times March 21 earnings, just to give you an idea how overvalued the name is at this stage. So what we're saying is that, look, we know Nintendo has been awesome in regards to its own IP. It's not as reliant as Sony is on third-party IP, so most of the games that it produces and it sells is its own. So that's a really big advantage for Nintendo, particularly if companies like Sony and Apple are under pressure to reduce their royalty fees of 30%. I think no one's really talking about Sony being under the same pressure, but it will come down to that, I think. So Nintendo doesn't have those issues, but the problem is that the valuations currently is factoring a lot of good news. And so what we're saying to clients is short the name into the good news, which is the launch of the Switch 2.
Interesting perspective, Amir. Thank you for that. So, if anything, do you feel that the Switch 2 is going to be a test of Nintendo's supply chain, which in turn is going to be tested by the entire global tariffs and the trade war narrative? And importantly, has Nintendo simply built up enough of inventory and a cushion and capacity to manage this, what looks to be astronomical demand?
Well, the first year's demand was always going to be big, right? So you can't really kind of judge the console's success based on the first year. The first year of Switch 1, they sold 10 million. This year, they're expecting to sell 15 million. If they sell any more over that, it's mainly because they've managed to handle the inventories quite well. Obviously, the tariffs is an unknown quantity. Already, the price of the console is fairly high, just below $500. So if Nintendo raises the price above that to keep margins on the hardware, then it's going to be more and more out of the reach of the average household, particularly at this current time. So, so beyond this particular year, where obviously die-hard Nintendo fans are going to be clamoring for the console, we would like to see, what's going to be the following year and the year after. Remember that, what we had was this massive boost from the COVID pandemic, which is not going to be, well, hopefully it will not be there again. So, this is why, if you look at the valuations of that year, the peak of that year, it's looking very, very overvalued. So this is what we're saying to clients, is that take your profits or even short it in the near term, wait for the share price to come off to more reasonable levels in terms of valuation. We can get back in there at more reasonable kind of valuation levels.